Okay, I'm recording this video after the close of trade Thursday, 27th of May 2010, and yesterday, Wednesday, I put out a video just saying that I thought we were going to see a bounce in the market on Thursday and into Friday, and almost as soon as I put that video out, the market started to rocket upwards. This was the end of trend warning signal that I was commenting on Wednesday. So this is the 4500 tip bar chart on the Emini, and this I was saying was going to potentially mark a low because it was a bounce on a support level in a higher time frame. We'd had our exhaustion selling on the downside, a little bit of bullish divergence at this point, and then the market just kind of took off. The second cyclical turn after the end of trend warning signal happened here just before the open on Thursday, and you can see it was a good 20 points above the low that was made on the close on Wednesday. So it was a good entry point because the market's rallied since then, but it didn't catch the absolute low down here. Coming into, just to show you what the professionals and amateurs were kind of doing, coming into that cyclical turning point, you can see all these professional down bars on the way down. So professionals are getting interested in buying into the open here. So down bars and professional blue bars shows that they're getting long. And coming into the open, we had a couple of data releases. We had the unemployment numbers and the GDP numbers, so that was one of the reasons for the activity kind of before the open. And then you can see there were a couple of good entry points later on in the day. The first one here, the next cyclical point that we see on the 4500 tip bar chart, you can see this retracement here is being driven by the amateurs. So down bar, down yellow bars is the amateurs, thinking that the market's kind of topped out, it's going to reverse. And of course, they get wrong-footed, and we have a couple of Rambo patterns there. You can see two R's, Rambo standing for a potential reversal of an amateur breakout. And when those bars get broken to the upside, that's kind of a good entry point when it coincides with cyclical turning points. So here we go. This is the amateurs expecting the market to sell off, and it doesn't. The professionals kind of take it higher. The next time we have a little Rambo pattern, same thing again. We kind of come into the lows, selling off a little bit. The amateurs thinking that's it, we're going down. No, they get wrong-footed. The market goes to the upside. And the next time we kind of come into that support level here, you can see these down bar, professional down bars. So the professionals getting interested in buying that low. We have bullish divergence and the market takes off to the upside. So there we go. That was just what was happening between Wednesday and Thursday. Now, we've got an interesting situation at the close on Thursday because we've had some extreme buying coming into this close here. And you can see here's the exhaustion buying at this point, very high reading. And we've got all these professional bars kind of coming into the close there. Now, we've also got Memorial Day weekend on Monday, and the market tends to be strong into kind of holiday weekends. So because the market's kind of snapped back, I think we're still going to see some strength on Friday, but potentially some profit taking during Friday into the close. So let me just show you on the longer term chart here. This is my 40,500 tip bar chart, and here's this extreme buying that you can see here. We formed an end of trend warning signal at this point. We've got a professional blue up bar at the end of the day here, signaling some profit taking. So I'm expecting to see a little bit of a pullback on Friday, but it's not going to be a reversal of trend until we see some bearish divergence. So similar to here, we've got our exhaustion buy at this point. Market tops out, bearish divergence, and kind of retraces a little bit. So going to be looking for those bearish kind of divergence points. There'll probably be some swing trading instead of trend range trading on Friday. That's what I'm anticipating at least. And then you can see, just looking at the higher time frames on the sine wave, this is what we're dealing with. We're dealing with resistance here, a cyclical turn approaching on the 135-minute chart. So in this time frame, we're still in a downtrend here because we're below critical support. We need to see a pullback and a downtrend, and then an end of trend warning signal before the trend is truly over. So this is the resistance that we're going to be coming into, I believe, on Friday. Then just looking at the daily time frame, kind of the longer term picture, I just wanted to show you this chart. This is the flash crash. We've had our exhaustion selling at this point, and basically what we're doing is we're putting in a bottom around this level. So we're kind of playing around, trying to figure out where that bottom's going to be made and shake out the weak hands. So we've had our bullish divergence signal here. So this is saying that there's less selling at this point, and so we're likely to see a resurgence of the uptrend. But we're still in this kind of bottoming process, similar to what we saw here. Just want to point these patterns. Exhaustion selling on the downside, bullish divergence, and then the market kind of takes off. In this case, the professional bars were kind of selling off early, and then they got back interested in the market here at the lows, 1060. In this case, the professionals were kind of selling at these highs up at 1200, and then they kind of got back interested during the flash crash and all this volatility here. So at the moment, what we're doing is just forming a pause in the market and trying to figure out this low before the trend direction kind of gets set. Just want to point out that I've updated the Commitment of Traders feature article on the website. You can find this article under the free stuff menu. There it is, Commitment of Traders. And what I've done here, I've kind of expanded a little bit on the previous feature article and updated my indicators for the Commitment of Traders data, which is now available within TradeStation. It's been available within TradeStation for months and months, and I've kind of taken my time about updating my indicators. I thought the code was going to be more complicated than it actually is. It's actually very simple within TradeStation now to pull out Commitment of Traders data. So I don't know why I waited so long. But anyway, just run you through the page quickly just so you can see what's here. Updated the video just on my kind of thoughts on the Commitment of Traders. It's quite long, about 19-20 minutes, but you might find it useful. A little bit of a link here that takes you down to the bottom of the page where there's some free code that you can download. There's a little bit of a summary here of what you'll find in the feature article. I've not updated the PDF file, so when you click on this, there is a PDF file, but it's to the old article. I'll update that in due course. And then just for, if you're unfamiliar about the Commitment of Traders, just got a little bit of a short introduction to what the Commitment of Traders report shows you. Then this is just a snapshot of some of the code that's been updated for TradeStation, so you can access the Commitment of Traders data, and that's downloadable in the free code section. And then just talking about what the commercials actually do, and this is a little bit of explanation about hedging and how most of the time the commercials are hedging. They also do trend follow at various points. We can see this in the SP contract, the S&P 500 futures contract here, and I just discuss where you see that kind of switch from hedging to trend following by the professionals. And then my kind of top 5 suggestions for how to use a Commitment of Traders, and this is how I use it in my trading. First of all, first suggestion is not to use the Emini Commitment of Traders numbers, to stick with the SP, the large contract data. Then I use an oscillator to calculate these kind of overbought and oversold levels, and the oscillator is just calculating differences between price changes and Commitment of Traders data. I've not released this oscillator, but we'll see. And then the stock market warning indicator, which I pointed out a couple of weeks ago. This was kind of pretty interesting when it signaled for the flash crash that we got a couple of weeks ago. So the code for that's available, and that's free on the site. And then how I'm using the Commitment of Traders data now that it's available for other markets. I'm looking at it in a whole range. I'm looking at it on the crude oil contracts and the treasury bonds contracts, because they're interesting from a Emini Trading perspective. And then also on the FX contracts, because I use that to signal changes in major changes in trend in the forex contracts, and move my trading capital accordingly. And there's another kind of indicator here based on divergence that I've not released, but I'm kind of still playing with at the moment. So there you go. And then at the bottom of the page there's some free code that you can download. It's really just for TradeStation users, but the code's open as well. There's a text version of the code, so you can see what's going on there, and then some other links to other articles on Commitment of Traders. So there we go. If you're interested in Commitment of Traders information, there's kind of a rather lengthy feature article and video.